Hello everyone, a very good morning, good afternoon, and good evening to all. Myself Vaibhav. In today's session of automated trading, we will be trying to finish up our setup involving the linear regression intercept and the SMA. This is the fourth part of the ongoing series which we started last week, and hopefully today we will be able to complete it. This is a brief description for the linear regression intercept, the SMA, the min max, and of course the ATR as well. Before we get started, here is the standard disclaimer. I would like to remind that this session is simply for the tutorial purpose and no claim is being made regarding the profitability or otherwise of the algorithms which we will be developing during the session. Suppose if you want to use any of it, I would recommend that you do extensive testing for many months, maybe even years, and also run it on the demo account to get a clear cut idea of the efficacy of the said algorithm. And of course, nothing in the webinar is to be constructed as an advice to trade or for any particular setup. On that note, we get started for our day. We have developed the buy side in the Friday session. What we needed to do was define the stop loss and the target price, and since we are getting involved in any trade only during the initial hours of the trend change, I think we can keep the target price and the stop loss in a 1 is to 2 ratio, and here I think a target price of half of daily ATR should be good enough, and to make the risk reward ratio we will be keeping the stop loss at 25% of the daily ATR. So we finish that part, and then we will move on to finish up our sell side setup. Here what we have done so far, we have defined the instrument subscription for USD JPY. The position amount has been defined at 0. We have got these all indicator blocks: linear regression intercept, the SMA, min max, historical candle data, and here all these are in hourly time frame. Then we have done these calculations to define the order validity, the sell point, the buy point, the minimum difference between minima and maxima which needs to be counted and compared, and it should be at least more than 40% to make sure there is good enough price momentum, there is enough volatility to make trading worthwhile. And we also have these min-max blocks, sorry, the historical candle blocks of 1 minute each to define the precise entry point, the execution point. And on the buy side, we have done these if conditions to define the requirements before any trade can get executed. So this was the last trade, and here this buy limit order execution block, and as I said, we need to define the stop loss and the target price, which we will do now. So let us get to calculation expression, and the same values will be applicable for the sale order as well. So we define the stop loss and the target price. Here we will need to connect these blocks, the flow, and for the stop loss we will need the ATR, and the ATR let me see. Okay, here is the daily ATR. Line 24 is the daily ATR, so we get it. This is line 24, and then we have to multiply it with fresh variable. For that matter, we will need to create new variable, and it is going to be named sell P, stop loss pips, and it is going to be 0.25, which is going to be the factor for multiplication. We also define the TPP, target price pips, and it is going to be 0.5, and here it will go the in a target price block. We create another variable, type conversion factor TCF, and it is going to be 100, as we have to multiply the ATR by 10 raised to the power 2 to get the double output value in integer format. So here it is, and now coming to the calculation, A1 into A2 into A3, A1 into A2 into A3, and this is going to be, here we will have to change this to integer, and the name is going to be SL, and this one also needs to be converted into integer, and this is going to be TP. So we have defined the stop loss and the target price. Okay, so here we connect this, and we have to connect these two blocks as well. So as you can see, now the flow is complete on the buy side. So as we have color coded the flow, we have finally this pink thread connecting all of our blocks. Now we move on to the sell side, and for the sell side requirements I will explain to you on the chart. So it is going to be a symmetrical setup. So all the conditions which we have on the buy side are going to be inverted to reflect the sell side requirements. So here, for the sell trade to happen, we need the last hourly candle close to be below the SMA 100, and at the same time it should have just close below the linear regression intercept as well, and the prior candle should have closed above the linear regression intercept. That way we are trying to ensure that this is a fresh new change, and these are the initial R's. And also we also bringing in the requirement that the maxima of last 3 hours should have been above this SMA 100 level. So here that scenario plays out in this instance. Here at we have around 14 GMT, whenever this candle closes, we have this close below the linear regression intercept as well as the SMA 100, and also the prior candle has closed above the linear regression intercept, and last 3 hours maximum value is also above the SMA level. Then we have to ensure that this difference between the maximum point of last 3 hour and the minimum point of last 3 hour should have the difference of at least 40% of the daily ATR range. So we will need to compare this difference of around 25 pips with the ATR, and it should be above the 40% of the ATR. So that is the requirement there. And then we want the execution to happen as and when the price starts to fall below the last hour's candle closing level, and for that we are bringing in 1 minute's historical candle data, and also to make sure that this is happening after due retracement and consolidation. We also bring in additional requirement that 10 hours back 1 hourly candle should have closed above the linear regression intercept, and as you can see here that requirement is not going to be fulfilled, so no trading will happen. As you can see, now this is the 14 GMT, so we will need to go back in time to check at 4 GMT. The candle close is below the linear regression intercept, and as I said, we want the 10 hours back candle to have closed above the linear regression intercept, and only then the sell trade will happen. So we are fairly clear that there should have been consolidation and also the prior retracement, and only after that the fresh trend change, whenever it happens, we want to get involved. So because of that, not every time this change happens, our trade will not execute. Only when we have all the conditions in place, the trade execution will happen. So now we turn our attention to the visual JForex platform, and we have to do a lot of if conditions to make sure that all the required conditions are in place. So we start right from the linear regression intercept. We bring in couple of if blocks at first, and here it is. So here we have got this value, linear regression intercept with shift 1, that is last hour's linear regression intercept value, and then we have to compare it to the last hour's historical candle closing level. For that matter, we have to go to the closing levels of candle 22, which has the look back period of 1, and it is defined for 1 hour. So we have to take into account the candle 22's closing levels, and so here it is, candle 22 close. It should have happened below the linear regression intercept value, that is line 16. So we now have to connect this with the requirement that first input is less than second input. All right, then we look back 2 hours, and the prior candle should have closed above the linear regression intercept value of that hour. So for that we have to take into account the candle 42's closing level. So here, and then compare it to the linear regression intercept value with a look back period of 2. So we take into account, and as you can see, we will have to go lower, and here we have our required variable, that is line 44. Here shift is 2, and is our linear regression intercept value, and the candle 42's closing level should have been above the line 44. So that means first input greater than second input. So we have to join this. Now we also have to compare the candle closing level, hourly closing level 10 hours back. So again we have to consider line 17. As you can see, shift is 10, and compare it to that hour's closing levels. So we have to take into account the candle 23's closing level. As you can see, shift is 10 and candle 23 is here. We consider its closing level. So okay, now the first input should be greater than second input. All right, so here we have defined three conditions related to the linear regression intercept, and these are basic requirements for any trade to happen. Let us arrange these blocks. Now the next requirement is to make sure there is enough of volatility. So we take into account the difference between minima and the maxima of last 3 hours, and the difference is AAD. As we have done this calculation, and it needs to be compared with minimum ATR difference, MAD. Okay, so now this condition is in place. We get couple of more if blocks, and here first input should be greater than second input. All right, then we have to compare the maximum value of last 3 hours to be above the SMA, and for that we are going to need to look into the min max values, and here as you can see we have these min max block defined for 10 minutes each with the time period of 18. So that is the data for 180 minutes, and we have to consider ask side high price for the maxima. Okay, so here we got our maxima 21 of okay, maxima 21 is there in place, and it needs to be compared with the SMA level, the 100 SMA defined on the hourly time frame. So here we have to compare it with line 18. Yes, so that has been defined, line 18. And now we want the first input to be less than the maximum value. Maxima should be higher. So we have defined this condition as well. Then we have to consider the candle closing level, last hour's closing level, which needs to be below the SMA 100. So again we take into account the line 18 here, and we compare it to the last hour's closing level, which is candle 22, and we consider its closing level. So we have taken this, and most of our conditions are in place now. It's time to bring a couple of more if blocks to define the entry point precisely, and then arrange these if blocks in the order to make it look aesthetic as well. So here the requirement is that the candle 22's closing level was was below the SMA 100. So we have defined 3 more conditions here, and with that we are fairly close to completing our sell side requirement. And now we have to compare 1 minute's closing levels to the last hour's closing level, and that would be our trigger point for the order to be executed. So here we will arrange this and then move on to the next and here we arrange this. Okay, and here we have now we have to consider the last hour's closing level in comparison with the last 2 minutes closing level. That is to make sure that the order execution happen only when we have the price action moving below last hour's candle close, and to do that we have to take into account the candle 22's closing levels again. So we take candle 22's close, all right, we got this. And here we have added these 1 minute each historical candle. So we now do the comparison, candle 31 and candle 32's closing levels. So here this is shift 1, this is shift 2. So the shift 1, which is last minute, it should have closed below the candle 22, whereas the candle 32's close should have been above the candle 22's close. So here we consider this, and then we have to take into account candle 32's close, and here it is. So we have defined this requirement as well, and the candle 32's close should have been above the candle 22's close, whereas candle 31's close is going to be below the candle 22. Now all that is left is to bring the pending open order and add the variables which we have already defined, and it is going to be a sell limit order. And as I said, it should be below. So here we have defined almost all the conditions. We will make sure that it is symmetrical, so we will take a look on the buy side as well. Yes, we have 8 conditions in place on the buy side. On the sell side as well, we have 8 conditions in place. Now is the time to put the variables. So here stop loss and the target price has been defined. So we make changes. Stop loss will come in. Here comes the target price. Slippage is going to be 2 pips. Trade amount, we will write it manually, 0.1 million. It's good enough for testing. You can make changes as per the account equity. Default instrument is USD GPY. Then is the question of price, and the entry point is SCP, sell execution point, for which we have done the calculation, which is 20% of the daily ATR, which will be added to the last tick price. So here is SCP, and we also have to consider the order validity time, which is 3 hours. So we have to take this into account as well. Yeah, it looks all good to me. Now we will test it briefly. So all our work of last 1 week is coming to fruition. Here we have the final setup now ready for the testing. So first let us save the file, save draft. Okay, I need to log in. And we will save the draft here. It's taking too much time. Let us see what has gone wrong. Oh. Let us try to export the file anyway. If we can do the exporting, then it won't be much an issue. As I can see, even the export is not happening, so unfortunately we won't really be able to test this, but the setup is complete, and I think You should try testing it on your own. Let me wait. If we can get the file exported, then we can test it. Mm, no, it's not happening. So I would suggest that you do the build on your own, and then you will have to, of course, necessarily carry out the testing to get what kind of setup which we have built, what kind of results we will be getting with it, and you will get a fair bit idea of its efficacy. So that's it from my side for today's session, and we will be back tomorrow with a fresh setup. Thank you all for joining in. See you tomorrow. Goodbye.